Today we focus on three major conflicts. Long-term holders have switched from selling to buying, yet whales continue to dump. Can institutional hoarding withstand this downward wave? To grow your Bitcoin holdings in BTC terms, BeWin is an option. Wednesday, January 21st. This is BitcoinTV Chinese channel, Where is the Chain? I am Michael. Let's first look at the most important data headlines in crypto over the last 24 hours. These recent Bitcoin pullbacks aren't due to on-chain issues, but rather tightening macro risks, causing Bitcoin to be sold off first. Looking back at last April's tariff war, Bitcoin dropped 12%. In October, as China-US trade friction escalated, it fell another 8%. This January, US-Europe trade tensions caused a 7% dip. Every drop aligns with risk events, weakening alongside US stocks. What does this show? Financial market uncertainty is rising, and Bitcoin is still treated as a high liquidity risk asset for quick cash, not a safe haven. On-chain data provides further proof of this trend. During pullbacks, exchange net inflows spiked briefly, reflecting position adjustments or risk control measures. But it didn't turn into sustained selling pressure. It's more like a repricing and risk absorption process after risks escalate. So, as long as exchange fund flows don't worsen continuously, this pullback shouldn't be seen as a structural shift to a bear market. Data shows that the 30-day net position for long-term holders, or LTH, has turned positive again. From late 2024 through 2025, these holders were selling heavily. While we haven't seen aggressive buying yet, they are slowly accumulating bit by bit. What does this mean? Those with long-term conviction are quietly accumulating at this price level. This rhythm suggests bottoming out rather than peaking. Historically, this kind of steady hoarding without aggressive selling often precedes a mid-term recovery. This indicator focuses on the overall structure rather than daily volume. Over the next 30 to 60 days, if net positions stay positive without large-scale selling, it shows long-term capital accepts this price. A price starting with an 8 is quite attractive for long-term holders. Conversely, if negative bars start appearing frequently, we'll have to re-evaluate the situation. Overall, long-term holders have shifted from cautious selling to quiet accumulation, which is typical of an early market recovery. Looking at recent exchange inflows, it's clearly dominated by large players. The exchange whale ratio has climbed to 0.52 to 0.55. This indicates the capital isn't from retail investors, but from concentrated moves by a few large whales. So what's the issue? Bitcoin is stuck at 90,000 moving sideways. ETFs are still taking over and buying, right? But the price just won't budge. Why? Because this setup looks like whales are using passive buying to slowly offload their chips. So look for two directions. If this whale ratio stays high, but the price can't return to the 95 to 98,000 range, there's a good chance of a pullback to 80 to 85,000. Conversely, if the ratio drops quickly in the coming days, but the price holds steady around 88 to 90,000, it means the market has absorbed the selling pressure. This would be a normal turnover on low volume. In that case, Bitcoin hitting 100,000 isn't impossible. If it hits 100,000, would you sell or chase the high? Let me know in the comments. Alright, please give us a like and hit the bell icon. Our channel gets over 2,000 new viewers on YouTube every day on average, so I always have to say a quick word to our new audience members. This channel follows Web3 News Daily. It's a news curation channel. What's it for? To boost your understanding of Web3 and the new finance. All the major reforms in this world always start with changes in finance. That's where it begins. So we track macro events and big news, hoping that as you enter Web3, you'll have a solid grasp of global trends to make rational investment decisions. Now, for the top headlines. Let's see if this pullback will see a drop like the last bull market, from 70,000 straight down to 16,000. What was the last straw that broke the market's back? The FTX collapse with SBF, right? So will another company fail to hold on now? Who might be the next ticking time bomb? MicroStrategy. Could that be it? If Bitcoin's price keeps falling, can MicroStrategy's stock hold up? Would they sell off their holdings in bulk to hedge the risk? That's a massive question. And right now, here's what to watch. In yesterday's show, we mentioned some companies have already started selling their Ethereum holdings. Now, there are some concerning moves with Bitcoin holdings too.
As of now, corporate Bitcoin treasuries are highly concentrated. MicroStrategy leads by a wide margin with over 700,000 Bitcoins, far surpassing the roughly 53,000 held by Mara Holdings. 21 Capital holds about 43,500. Japan's Metaplanet has around 35,000. Corporate Bitcoin holding has long been a high barrier strategy that only a few strong entities can afford.
Bitcoin is becoming a mainstream asset, and the difference this year is the participation from listed corporates. So MicroStrategy and its copycats, who are really the equity capital markets right now, are wide open for crypto strategies, and that's been the hottest part of the market.
Monitoring shows that a wallet widely believed by the market to be related to GameStop transferred a total of 2,396 bitcoins to the Coinbase Prime hot wallet in 2 transactions within just 16 hours. These occurred on January 17th with 100 coins and on January 20th with 2,296 coins. This amount accounts for nearly half of its known Bitcoin holdings, with a total value estimated at about $210 million, based on the price at the time of transfer. If we refer to GameStop's cost basis in the range of $106,000 to $109,000, in the current price environment, its Bitcoin treasury has an unrealized loss of about $70 million. As of now, the company has not provided any explanation for these on-chain actions.
I checked GameStop, and its stock has dropped by about 24% over the past year, and its average Bitcoin price is probably just under 110,000. So at a time when the stock is losing money and the coin price is down, it transfers half of its Bitcoin holdings to Coinbase. What is it trying to do? The goal is obvious. So this is a very bad signal. Once a company starts selling its Bitcoin holdings, all the Bitcoin treasury companies around it will follow suit. Ultimately, it will affect MicroStrategy. This is a huge bellwether. This year's decline is already bearish on technical indicators, but will another black swan appear? Michael Saylor has such high visibility, he's at every conference. This is a signal of being short on cash. He doesn't need to promote MicroStrategy anymore. What he needs is investment, financing to maintain his stock price, and to keep hoarding Bitcoin. And in this bear market, or this round of decline, what we need to watch is who this black swan will actually land on. MicroStrategy is number one. Our show essentially doesn't speak to the old OGs of Web3, but we do have many old OGs watching our show to get information. We want to explain a concept to the newbies who just entered the market. What is coin-based? What is U-based? U-based is gold-based. It means in this market, are you looking at your earnings in equivalent US dollars or equivalent U increasing? Or is your thrill seeing your 0.1 Bitcoin today become 0.2 Bitcoin in 2 months and 0.3 Bitcoin in 3 months? Is it the increase in coin-based that excites you? Or is it that Bitcoin is worth $10 today and 100 tomorrow? That's your thrill. So, people who have truly been in this circle for a long time will know the importance of being coin-based. How to increase your Bitcoin rather than looking at whether it's worth 100,000 today or 80,000 tomorrow. How to make coin-based increase in an orderly way is very, very difficult. Many people ask if buying low and selling high can increase their coin-based. If you're lucky, yes, but what buying low and selling high really does is increase U-based. And today we're going to tell you a steady method that can consistently increase your Bitcoin on a coin-based basis.
In the context of current market volatility, BeWin plus 8, U-based and BTC plus number 2 coin-based, entered a new operating cycle on January 16th. The main difference this time is the pricing method used to observe the performance of the same strategy framework across different dimensions. Structurally, the U-based approach focuses more on net asset value control, while the coin-based approach focuses on changes in Bitcoin quantity. Reflecting different risk profiles from a long-term holding perspective, neither is superior. It's mostly a difference in pricing methods. What's more noteworthy now is the strategy's risk control and execution adjustments under market changes, rather than the form itself.
It's still pretty much completely market neutral, and it won't leave any long or short exposure. That's the first point. Second, with the recent market rally, market activity has picked up and the maximum yield is slowly climbing again. This time it's related to the overall trading depth. Beyond the strategy, we've also used option protection. For instance, if a flash crash occurs, like some black swan event or systemic risk, then how do I guarantee the value of my coins? That's something I think we'll be adding in this phase compared to before.
BeWin, this is a private tool we've specifically provided for our channel's fans, a wealth management tool. Both U-based and coin-based are available. For the 1-year U-based after management fees, the average yield is about 25%. Now, the coin-based is our flagship product. The 3-month term reached a 7% annualized yield. That means when Bitcoin rises, it rises too, But on top of that gain, it adds another 7% coin-based yield, making your Bitcoin keep increasing. For example, if you reinvest 7 Bitcoins with compound interest, in 10 years it becomes 15 Bitcoins. This is a fantastic tool for constantly increasing your coin-based holdings. With this coin-based yield, we can challenge all centralized institutions. Bring it on. Let's see if this one-year Bitcoin-based plan can hit double-digit returns. Institutions are all in on RWA, while retail investors stick with meme coins. Are privacy coins actually worth buying? Polymarket has been halted by 33 countries. Kalshi received a court warning and suspended service too. Can prediction markets survive this? Right now, the total crypto market cap is around $3.2 trillion. A few days ago, Bitcoin dipped below 90,000 and retail investors are starting to question everything. Institutions are now searching everywhere for the next big trend. So today, looking ahead to 2026, let's talk about RWA, meme coins, and privacy coins. Which of these three sectors will come out on top?
Wall Street institutions are systematically betting on RWA tokenization. Bernstein believes 2026 will kick off a tokenization supercycle. Grayscale predicts RWA could see a 1,000-fold expansion by 2030. Bringing traditional assets like real estate and bonds on-chain has become a key institutional focus. Projects like Ondo Finance and Chainlink are among the first to benefit.
You know, I do believe we're just at the beginning of the tokenization of all assets from real estate to equities, the bonds across the board. So we look at that as the next wave of opportunity for BlackRock over the next tens of years as we start focusing, moving away from, traditional financial assets by repotting them in a digital manner and then having people stay in that digital ecosystem.
Retail funds haven't followed institutional paths, but remain focused on meme and privacy coins. Early this year, meme coin market cap rose 23%. Inscription projects stay active due to low costs, but it's still a zero-sum game. Privacy coin trends are more polarized. Quai Network rose 261% early this year, yet the sector's market share is still under 1% of the total crypto market.
According to the StockTwits poll, 64% of people are still bullish on RWA, meme coins, and privacy coins. But let's look at them separately. RWA has a great vision, right? You can buy stocks and traditional assets on chain, but right now the market is too small and moves too slowly, and liquidity is low. Meme coins look exciting, but with insider trading and unlocked sell-offs, there's always some drama. As for privacy coins, with regulations tightening, those tokens that only pretend to be private likely won't fare well. But you should definitely watch Monero XMR, a truly private token. You can trust other privacy coins, but you really should hold some Monero. Looking ahead to 2026, trying to strike it rich on a single sector or coin is as hard as winning the lottery. The real key is picking the right direction and growing wealth slowly. Use tools like CoinW. Prediction markets are hot right now. What are they? It means anything can be predicted and bet on. All public information can be turned into value for you to speculate on online. Speculating is basically like running a betting pool, betting on high or low, true or false. Now, as the scale of betting gets closer to public and political events, do you think regulators will just sit back and let you play however you want?
Current regulation focuses on prediction platforms Polymarket and Kalshi. In Europe, Hungary and Portugal have already blocked or restricted Polymarket. Reasons mainly involve unlicensed operations, political prediction content, and compliance risks. Ukraine, France, and Belgium have followed suit. Currently, Polymarket is restricted in about 33 countries.
It's the most accurate thing we have as mankind right now until someone else creates some sort of super crystal ball.
In the US, a Massachusetts court ruled Kalshi may need to stop offering sports contracts to locals or face a total ban. Despite tightening regulations, market trading remains hot. Data shows that on January 12th, global prediction market daily volume hit about $702 million. Kalshi contributed about 2/3 of that total.
The regulator's message is very clear. All you prediction markets have unclear licensing and overly sensitive topics. But let me ask, if licensing is clear, it means your compliance costs go up, and the cost for users to participate will definitely rise. And if the topics aren't sensitive, who the hell is going to participate? Is it even fun anymore? So you can imagine how this goes. With Polymarket, we can see exactly how it's shifting towards Binance and AST. We can predict that the future of this prediction market will definitely move towards decentralization. Forget about legal entities or going public. If you want to play, to predict, and to be serious, where anyone can open a betting pool and everyone can predict and settle bets, then decentralization is the only choice. Once you're decentralized, just see what the regulators can do. All right, let's look at the news flash.
The White House has laid its cards on the table on X. They're talking about victory, they're talking about deportations, and they're not even stopping the memes. Political communication has fully entered a high-frequency, screen-flooding mode. Dogecoin is also getting serious about making an app. The Doge Foundation is teaming up with the NASDAQ-listed company Berkshire Holdings to develop a mobile application called Such. The goal is clear: to launch and go live in the first half of this year. Crypto payment cards have suddenly gained massive popularity. From December 2024 until now, daily transaction volume has jumped 22 times, with nearly 60,000 transactions and $4 million moving every day. Ether alone accounts for nearly half of it, while others like Gnosis, MetaMask, and Solflare are also chasing behind. On the first anniversary of the R1 release, DeepSeek revealed clues about Model Phi 1 through GitHub's FlashMLA update. The code shows it's not the same model as V32. The core changes lie in the KV cache layout, sparsity, and FP8 decoding, clearly making it more than just a minor update. Gold today surged past $4,850, rising 1.83% within the day. New highs are being hit constantly, and the market atmosphere is even hotter than the price.
In the crypto world, many people only care about whether the price will go up, but few ask, how do you sell? When do you sell? Liquidity determines whether you can get out, not just whether you can make a profit. No matter how good the asset is, if it lacks trading depth, it's a trap. The profit you see is just a number on paper. To actually bring that money home and put it in your pocket, you need someone willing to buy when you want to sell. In a low liquidity market, a single sell order can crash the price. You think it's an opportunity, but it's actually a trap. Everyone, remember, think about how to exit before you talk about how to enter. Look at the trading depth first, then look at how much it has gained. Many crashes happen not because the project is bad, but because liquidity suddenly vanishes. Slippage might be 0.1% when buying, but 10% or even higher when selling. So in the end, all your profits go back to the market, especially with those small altcoins. Sentiment-driven pumps often lead to situations where you can buy in but can't sell out. That's why truly mature traders always put liquidity first. I'm reminding you to check the order book depth first, then see the 24-hour trading volume, and check if large capital can enter and exit smoothly. Remember, making money is the process, but exiting is the result. Only the profit you can pull out and pocket is your real wealth. Give us a like if you understand. All right, welcome to our membership where you'll find all the benefits. We hope to work hard with all our members and grow our wealth together in this bull market. See you tomorrow.